Happy 2022, Supernova Real Estate fans. This is Supernova back with your Supernova Real Estate report on this Supernova day. I just want to give everybody an update of our Seattle metro market and see what's going on here in the headwinds of how you're going to be buying and selling property here in this coming year. You know, we keep hearing terms like economic bubbles. I even heard today and read an article today on what's called now a super bubble. And I keep looking for the economic indicators of which they're discussing the super bubble, and that is, household debts going up, inflation skyrocketing, short supplies in the supply chain, as we've all been dealing with in the grocery stores with, empty shelves or things in empty places and shelves, even though thinner stock, thinner inventory, all that other kind of stuff. But even with thinner stock and thinner inventory, that kind of brings us to our Seattle real estate market. The most dominating information I have goes along with the average price now in Seattle for a 3-bedroom home, $920,000. $920, people. That means PITI with your 20% down, you're going to be somewhere around $3,600 a month for your mortgage payments on your house. And that will go up depending on, how, if you put down a 5% loan or a 10% loan. The cool things about this right now too is that Fannie Mae has raised the minimum average of which they will secure your loan. So you can now have a 5% loan up to $887,000. But let me tell you, Fannie Mae, they make you prove it. You're going to have to prove your income because, these lenders, even though it's a conventional loan, they got to have that thing insured and, be able to resell it on those, I think, what are they called? Those commodity swabs, whatever the Big Short was about. And you will need and have a qualifying loan in order to purchase. That's kind of the cool thing. It's like everybody's talking about these real estate bubbles and stuff, but everybody buying houses right now can afford their house. They're cutting budgets, though. I mean, things that are happening, like with my clients, is that they are, picking and choosing what they can, what their leisure expenditures are. More tightly now. I mean, they used to be a little bit more loose with what they could spend their money on, and now they're tightening it up because that percentage of your income going towards your mortgage now is going to be in that 40+% range, which is tough. But as I keep saying, for the past 6 years, since 2016, it'll be cheaper this year than it will be next year. And I promise. And speaking to that, cheaper this year than next year. Next year prices are going to start in about 60 days. Put that on your calendar, people. April, we're going to see these $900,000 houses that are being bid up to $1,050,000, $1,001,000. Opening prices are going to be at that $1 million price point, up from that $900,000 price point. And then we're going to see that same bidding war, 13 to 27% over asking. Yes, there were articles this morning, on the Channel 7 Facebook and the Como 5 and all those guys saying people are paying upwards of $500,000 over asking price. But that is still in that 27-25% range over asking, because we have $2, $3, $4 million homes that are selling, and when you're paying $2, $3, $4 million for a house, that extra $500,000 isn't as much as you think it is, because of your wealth at that point is pretty good. We're still seeing, slow paces in that $3+ million range, though. They are not flying off the market unless it's a multifamily. You got an apartment building for sale? Please give me a call, because there are buyers hunting. And that is fantastic. Even yesterday, this beautiful fourplex built in 61 came on the market in Renton. I loved it. Came on for $1 million. They had an offer review date of January 31st, gone in 2 hours. You real estate brokers out there that are taking early offers, please don't shoot your clients in the foot. I mean, in 4 days, they could make hundreds of thousands of dollars more than what that base price offer that you just received from somebody else. Yes, it could have been cash, so where the other offer is going to show up. And yet, in 72 to 48 hours, or 72 to 96 hours or whatever, I think that's right, 24. After that, you could be making hundreds of thousands of dollars more. I mean, will you wait 4 days for 200 grand? I would. I tell my younger agents, they're getting, oh, I'm afraid to drive. It's so far. It's like 20 miles. It's this and that. And I'm like, well, who in their right mind won't drive 30 minutes for $10,000? I will all day. It's great. I love my job, but that's what my value is worth. And that's what I want to bring to you because you are worth it. And so is getting in your car and doing what it takes. Because do it all. Give it all. Your clients have been saving, scraping, investing, and now they're ready to put it into a market, and they need a resource, which is me, to be able to navigate them and get you through that. And I am that resource, and we can get it done, and I will take care of you all along the way. And that's just my pleasure. What are we going to see? We're going to see greater and greater scarcity because people are going to be holding tighter and tighter because real estate taxes are going to be going up. And so we might see some lower people with less income having to sell their house because they're being priced out tax-wise. Incredibly sad because you should be able to stay in your home and not be taxed out of your house, right? And, you've been living in your home for 30, 40 years and you paid $150,000 for it and now your house is worth $1.3 million. Your Social Security is $1,600 a month, but your tax bill every month is like $1,500. It's crazy. $15,000 a year. It's too much. Too much for you. And I know we got those senior exemptions and things like that, but it just defers it. And you still got to owe that money when the house sells. Again, we got to do something about that because everybody should have a right to stay in their home and not be taxed out of it. And is part of that my fault for helping to drive up prices by negotiating higher prices for my sellers, and my buyers to be able to beat out the other buyers? Yes, it is. And that's just the nature of more people. You got a great economy. You got, a bunch of people moving here into Seattle and they want places to live. And since we have two bodies of water that divide this metro area and homes don't float that well, you got to be able, prices are going up. Scarcity means demand. Scarcity means demand. So that's what I'm going to leave you here today with is, it's going to be more throwing the elbows in this market to get it done. So be fast when you go to look at those houses. Don't let them sit for days. Go now. Price, features, location, pick two. I don't care if you think you're going to outsmart that math, but if you can outsmart gravity, you're going to be able to buy whatever house you want anyway because you just outthought their entire human race at this point. So that's it. This is Supernova with his Supernova Real Estate Report, and I'll be talking to you soon. Thanks much.